Good morning everybody, and welcome to members of the media. It's not often in these days that we get to meet face to face. My name is Thabo Madzinga, Managing Director for Britam. We look forward this morning to sharing with you some of our aspirations and ambitions that we have for the region and for Africa at large. We also look forward to sharing with you about our heritage that we've built over the last half century, and to share with you some of our successes and some of our strengths. Let me take the opportunity to welcome our panel this morning. We are graced with our chairman, Mr. Mohammed Karama. Thank you for joining us.
Thank you.
We also have our new Chief Executive Officer, Mr. Charles Njuguna. Thank you. And we're also graced by Judah Niko, our Chief Investment Officer. And also a warm welcome to members of our management who are present with us today. I would also like to acknowledge this morning our colleagues and our staff who stand behind this great brand, and also to our clients who are watching this and who trust us with their financial journey and who are the reason for our existence. This morning, we plan to take you through an overview of our business, to share a little bit about our financials, and to give you a sense of our strategy moving forward. The Britam Group has a presence in over 7 countries. We have a heritage that stretches over half a century. We operate in 7 countries in East Africa and part of Southern Africa, and clients across this region trust us with their financial journey, a responsibility that we take very seriously. We are certainly a recognized market leader, and we manage close to 250 billion assets across the countries in which we operate. Looking at the year 2020, I think it is clear that this year was certainly unprecedented in many ways, at least in our lifetime. And so we have seen unprecedented disruption in our economies, in our markets, and certainly in our day-to-day lives. And so it's been important for us as an institution to stand behind our people during these tough times, and to also play our role in the community during this pandemic. But this pandemic has also created opportunities for us to think about new ways of reaching our customers, new ways of working for our staff, and certainly new ways of thinking about solutions that we take to our clients. And so our business has certainly remained extremely resilient in what has been an incredibly challenging and tough year. And so during this tough year, we've managed to still grow our business. We have had to tighten our belts and reduce our operating expenses. And so our business remains very strong. It remains strong in terms of generating cash, and so we've seen our cash flows continue to grow at a CAGR of 11%. But I think the resilience of our economies has shown through the rebound and the positive signs that we're starting to see in 2021. And so that gives us hope that we will have a better 2021 than we saw in 2020. And so looking at our business through this crisis, it is clear that at least on a financial basis, we managed to grow our investment income by 22%. As I've mentioned, our top line revenues grew by 4%, and we focused significantly on containing our costs, and we managed to reduce those by 6%. But what is critical for us is that our operations remained resilient through this time. And we managed to, with our staff largely working from home, to continue to serve our clients during these tough times. Looking back at our previous strategic cycle from 2016 to 2020, it is clear that over the years, we have built an incredibly strong business, a business that is resilient to shocks and tough times. And so it is important for us to take these learnings forward, and I am therefore grateful to my predecessor, Dr. Wairegi, on which our foundations for our business have largely been built. And so it is also important for us to reflect as a business on areas of improvement. And so we take stock, and we are clear that we need to reduce our operating costs. We are also clear that we need to enhance our IT infrastructure to adapt to this new way of working and reaching our clients. And so for us as a business, we're not only interested in better solutions and products for the communities that we serve, but we are fundamentally interested in ensuring that that we have better communities for the solutions and products that we offer. And on that note, I would like to invite our Finance Director, Mr. Charles Njuguna, to take us through some of the highlights and give you a sense and provide context to our financial performance for the year 2020. Thank you.
Okay, great. Thank you very much and good morning. I'll take you through the numbers of the performance for 2020. So we've had a good year. So despite the shocks we went through in the economy, largely because of the COVID experience, we've had a good experience. And as you can clearly see on the left-hand side of the graph, our top line grew by a CAGR of around 8%. And this has been growing year on year to finally close 2020 at a level of 28 billion. So at least the confidence of the customers and the market is quite evident in terms of how that has been evolving over time. Again, our investment income has also recorded a CAGR of 11% over a 5-year period. And again, that clearly shows that we are repositioning our investments to be able to optimize our balance sheet and also generate good returns from those investments that we do have. On the assets under management, which are largely held under the asset management company, again, those have grown with a CAGR of 23% to currently close at a level of 250 billion. So that's a growth of around 10% between 2019 and 2020, which again is a sign of confidence of the clients who are really investing with us. Our total assets again have grown by a CAGR of 13% to close at a level of 136 billion, which again is a commendable growth given the environment that we are operating in during that period. So when you look at the actual performance from a return perspective, I did mention about the revenue growth at 28.2 billion. Again, on a year-on-year comparison, that's a 4.2% growth, which has been quite good given the environment we were in. When you move to the life company, again, we had premiums of 12.4 billion. We had a slight dip in that performance of 10.6%. Again, this was also reflective of the environment we were in, whereby we had quite a number of surrenders. So hence the dip we had in the life business. In the regional business, the international business, the 6 countries were able to grow by 50%. Their contribution to the overall revenue was 28%. So these ones have turned around and they are becoming quite a significant piece of the overall business. Then the general insurance business did record revenues of 80 billion, which is a slight 1% dip compared to the previous year. So when you look at the profitability of the businesses, last year the group was able to deliver a profit of 4.6 billion against a loss of 9.7 billion in 2020. And the key reasons for that was the market impact on our investments. So fair value losses came to around 2 billion. We also had an increase in the share of our associates loss, which is housing finance, at a level of 823 billion. So when we combine all those fair value losses, you get to a level of around 4 billion. Then we had an investment loss in one of our funds that we manage within the asset management business, which resulted in a provision of 5.2 billion. And all this was being done to cushion our customers against the adverse market impact that is going to come through on their investments. When you move to the life business again, we had a profit of 3.7 billion in 2019 against a loss of 2.9 billion in 2020. And again, this was a factor of just the environment and the performance of the investments that we had. So the fair value losses did contribute quite largely to this 2.9 billion. And as I mentioned, also trying to cushion our customers against the adverse impact of the downturn in the economy. On the GI regions, which is the international business again, we've seen the profit grow 20-fold. So from a profit of around 39,000 in 2019, this has grown to 832 million in 2020. So we are seeing quite a significant level of contribution coming through from the international businesses, which are the 6 countries that we have, and they were all profitable. When you look at the GI business again, we had a loss of 309 million in 2019. This year we have a profit of 380 million. So again, you've seen the turnaround largely driven by the investment returns, as well as a turnaround in the health business. So in a nutshell, that's the overall performance of the group. So we are seeing there's some good underlying performance coming through from these businesses. So thank you very much.